Most people come into trading believing the goal is to trade more. More setups, more charts, more action, more wins. It feels logical. If trading makes money, then trading more should make more money. But this belief is exactly what destroys most traders before they ever become consistently profitable. Because the truth is uncomfortable, counterintuitive, and rarely talked about. Some of the most profitable decisions you will ever make in trading happen when you do absolutely nothing. No trade can feel like failure. It can feel like hesitation, fear, or missed opportunity. But in reality, no trade is often the most disciplined, professional, and profitable choice you can make. The market does not pay you for activity. It pays you for patience. It pays you for selectivity. And it pays you for knowing when not to participate. The market is open almost every day, moving constantly, creating endless noise. Candles go up and down, indicators flash signals, social media explodes with opinions, and it always feels like something is happening somewhere. That constant movement tricks the brain into thinking opportunity is everywhere. But movement is not opportunity. Volatility is not edge, and action is not progress. Professional traders understand something that beginners don't. Most of the time, the market is doing nothing worth trading. It's chopping, ranging, reacting to random order flow, or simply waiting for real information. During these periods, every trade taken is a gamble dressed up as analysis. You might win a few. You might even feel confident. But over time, those trades slowly bleed your account through commissions, spreads, slippage, and emotional fatigue. No trade means no exposure. No exposure means no risk. And no risk means you live to trade another day, when conditions actually favor you. One of the hardest lessons in trading is learning that boredom is not your enemy. Boredom is information. Boredom is the market telling you there is no edge right now. But most traders interpret boredom as a problem to solve rather than a signal to respect. So they force trades, they lower their standards, they convince themselves that this setup is close enough. And that's where consistency starts to break down. A high-quality trade is rare by nature. If it were common, everyone would be profitable. Real edges don't show up every hour. Sometimes they don't show up for days, sometimes weeks. And that's not a flaw in trading. It's the reality of probabilistic systems. Your job isn't to extract money from the market constantly. Your job is to wait for moments when probability is clearly skewed in your favor and act decisively only then. Think about this. If you only took your absolute best setups, your top one or two patterns, under ideal conditions, how many trades would you really take per month? Most traders, when they're honest, realize it's far fewer than they're currently executing. And when they backtest those trades, they often discover that those few setups account for the majority of their profits. Everything else is noise, distraction, and unnecessary risk. The market rewards restraint more than aggression. This is difficult because restraint feels passive and aggression feels productive. Clicking buttons feels like work. Waiting feels like laziness. But in trading, waiting is work. Waiting requires emotional control, confidence in your edge, and trust in your process. It's much easier to take a mediocre trade than to sit through hours of uncertainty doing nothing. No trade also protects you from yourself. Every trade you take consumes mental energy. It creates emotional attachment. It exposes you to fear, greed, hope, and regret. Even winning trades can be exhausting if they weren't planned or aligned with your strategy. Overtrading doesn't just damage your account, it damages your decision-making. The more you trade, the more likely you are to tilt, revenge trade, or abandon your rules. Many traders blow accounts not because their strategy doesn't work, but because they can't stop themselves from trading when it doesn't apply. They trade during low-volume sessions. They trade in unclear trends. They trade before major news. They trade because they're bored. They trade because they're trying to make back a loss. And each one of those trades feels small and harmless in the moment, until they add up. No trade is a form of capital preservation, and capital preservation is the foundation of long-term profitability. You cannot compound an account you've destroyed. You cannot benefit from a great opportunity if you've already maxed out your risk or lost your confidence. Sometimes the most profitable thing you can do is protect your capital by staying out of the market entirely. There's also a deeper psychological reason why no trade is often the best trade: clarity. When you're not in a position, you see the market more objectively. You're not emotionally invested in a direction. You're not rooting for price to go up or down. You're simply observing. That neutrality gives you better judgment, better timing, and better execution when a real opportunity finally appears. Contrast that with being overexposed. When you're constantly in trades, every candle feels personal. Every pullback feels threatening. Every move against you feels like the market is wronging you. That emotional distortion leads to poor decisions: cutting winners early, holding losers too long, or jumping into new trades just to feel in control again. The best traders are not the ones who trade the most. They're the ones who trade the least, but trade best. They understand that their edge only exists under specific conditions, and when those conditions aren't present, they step aside without hesitation or frustration. They don't feel the need to be right every day. They don't measure success by activity. They measure it by execution quality. Another uncomfortable truth: missing a trade is often better than forcing one. Yes, it hurts to watch price move exactly how you thought it would, without you. But missing a trade does not cost you money. A bad trade does. And over time, avoiding bad trades is far more important than catching every good one. You don't need to capture every move. You don't need to be in the market every day. You don't need to prove anything. The market will still be there tomorrow, and the next day, and the next. Opportunity is endless, but capital and discipline are not. When you start embracing no trade as a valid outcome, something shifts. You stop feeling pressured. You stop chasing. You stop reacting. You become selective. And selectivity is power. Selectivity turns trading from chaos into a structured, repeatable process. This is where confidence really comes from. Not from winning streaks, but from knowing that you can sit on your hands when nothing meets your criteria. That you don't need constant validation from the market. That you trust yourself enough to wait. Many traders think discipline means following rules when they're in a trade, but real discipline is following rules when you're not in one. It's closing your platform when conditions aren't right. It's accepting that today might be a zero trade day. It's choosing long-term consistency over short-term excitement. The irony is that once traders stop forcing trades, their performance often improves dramatically. Their win rate increases, their drawdowns shrink, their stress levels drop, and their confidence grows, not because they're doing more, but because they're doing less, better. No trade is not giving up. It's leveling up. It's the moment you stop trying to extract money from every tick and start aligning yourself with probability, patience, and professionalism. If you're struggling in trading, ask yourself this: how many of your losses came from trades you didn't need to take? Trades that didn't fully meet your criteria? Trades taken out of boredom, frustration, or impatience? Now imagine removing just those trades from your history. How different would your equity curve look? Trading is not about constant engagement. It's about timing. And timing requires waiting. Long stretches of waiting punctuated by brief moments of decisive action. That's the rhythm of profitable trading. Anything else is noise. So the next time you're staring at the charts, feeling that itch to trade, pause. Ask yourself if the market is actually offering you an edge, or if it's just offering movement. Remember that doing nothing is not the same as being inactive. Sometimes doing nothing is the most intentional, strategic, and profitable decision you can make. Because in trading, just like in life, knowing when to walk away is often more important than knowing when to step in. And more often than most people realize, your best trade really is no trade at all.